Hi, good afternoon, everybody. Thank you all for joining in. We'll just wait for a couple of more minutes for more participants to join in. We'll start in about 5 minutes. Yeah. Okay. Hope my audio, video, everything is okay. All clear. Just give me a thumbs up and then we'll go ahead. All right. Perfect. I'm having certain delays on my side. So do bear with me on that. So today's topic again is a very interesting topic. We're doing this under Neo. Uh, we'll talk about the product a little later and the returns. There's some updated numbers as well. So a lot of things have been happening over the last 3 months. NASDAQ has been correcting. Tariffs have come in place. So let's look a little back on what's been happening. What is the expectation? And it's just 2 steps back. Take some time, see what's happening, and then only come up to whether it is the right time to take that decision out for investors to invest in NASDAQ or rather US. All right. Disclaimer, we don't own it yet, but we've had positions in NASDAQ in the past, but as of now, we do not own it. Okay. See, what the Fed has been doing right now is, see, after the tariffs, now they are just on panic mode, right? The traders are now expecting, rate cuts of more than 1%, right? But if you look at what is happening in history, this 2020 to 2025 has been very steep in terms of Fed rates, right? And usually it does not bode very well for growth. And now you're seeing a tariff war also coming in, which means that there is a very, very big risk of a slowdown in terms of growth and sticky inflation, right? Why do we say sticky inflation? Naturally, because if you do want investors to put money in the US, if you want businessmen to put money in the US, it is not at a cheaper cost. It is obviously at a high cost. Like land cost is very high. Commodities right now are correcting, but compared to the other country, you would still have, a lot of cost.
Harshil, you are on mute, Harshil. Can you check?
For all the technology, every single time technology is never on my side. All right. Now everything is okay. That's why I asked everybody in the beginning if everything is okay, we'll go ahead. Hey, give me a thumbs up again.
Yes, it's now working.
Perfect. Thanks, yeah. So much for US tech, yeah. Okay. So growth has been faltering, and the expectations going forward also is that growth would be low, right? Hence the tightening that is coming in from US, from Europe. You'll see everywhere on that there is a lot of scenario for tightening, and growth is faltering. So go ahead with this assumption now that after tariffs also you will see a slowdown in terms of growth, and that US would be a lot more attractive in terms of debt because that's the focus. Right. Now, what happens when the Fed cuts rate, and which is what they've been doing, right? Risky assets start to do very, very well. What are the risky assets that start to do very well? Your commodities start to do very well. Your high yield debt starts to do very well. And your dollar starts to do very well. Now, I'll pause here. If you've been tracking the dollar index, what has been happening to the dollar index? Put your comments below. Now, we are in a scenario where the dollar is supposed to do well, but what's happening to the dollar now? Okay, 2 comments have come saying dollar is losing value. All right. Any other comments? 3 comments rather. So far, Indian rupee is weakening. No, Indian rupee actually the depreciation for the Indian rupee has actually been stronger. Right. So there's a comment that said dollar strengthening. No, dollar has not been strengthening. This year alone, the USD index, which is the dollar index, has fallen by 6%. Right. So the dollar is weakening, but in a scenario like this, usually you see that the people go towards an asset that they are that is probably safety, but they do not even consider that to be safety. Right. So stocks going down, dollar index going down. Right. The only asset class that is actually seeing some amount of money going in is on the US debt part. Like, I'm sorry, I don't speak Tamil, but I can understand it. So maybe probably I can give you mic access later and then we can have a conversation. Right. So now, this is a very, very important point to note. At the start of the year, we were talking about how this year is going to be a currency war year, and it is proving out to be a currency war year. Right. From a broader sense, US does not seem to be very, very strong. And if you look at what's happening, this is last week's data, where speculators have turned negative on the dollar for the first time since October. So they now hold more than 932 million in sort of short. So this is a good indicator to say that, yeah, people are negative on, the dollar, despite them showing a lot of strength in terms of tariffs. Right. So there's a general negativity, right, for the dollar, for the US in terms of growth. So they are not believing in that asset class at all. That is, global traders, global speculators, they are not. Right. There's a comment that said US has printed a lot of money in COVID. Also, inflation plays a crucial role. Yes, they need inflation. Otherwise, their debt levels will remain high. So they need inflation. Right. And hence, today we are in a scenario where all of these asset classes are not very attractive. So is it the right time to invest in NASDAQ? I'll pause here for to get your view, right? Is it the right time to invest in NASDAQ based on the current level of data that we've seen? Okay, there's a comment that says yes. Okay, it has not probably not reached its bottom. Yes, neutral. Okay. Wait, there's a comment that says wait for further dips. I'm sure there is always the depressed asset. All right. Yes, for domestically produced dependent products. Okay. Is NASDAQ equivalent to NSE of India? Yeah. You have Nifty 50, right? There is NASDAQ. Okay, no no further comments, but most of you have said yes. All right. So now let's go and look at what the concern is right now. Are we in a bubble? See, Max 7 today, this is as of the end of last year, they still happen to be 30% of the entire S&P 500. So 493 companies, right? Uh, their weight is 70%, but the top seven is 30%. Now, my question to you, because I want to know if you've been reading the newspaper or not, what is the return of the top seven versus that of the other 493? Right? What is the return? If you want me to give you the time frame, I can give you the time frame as well. From 2022 December, what has been the return? So that means last 2 year return. That's what I'm talking about. Double. Okay. 50% CAGR, 2x, 60% for Max 7. All right. Ten times. No, 10 times not the right answer. I heard the S&P 500 moves due to Max 7. Yeah, you're right. So what is the percentage? Somewhere around 33. Okay, 2x, 60. I don't think there will be growth like in the past decade. I agree with you on that. Okay. So the return actually since December 2022, just for the top 7 companies, right, is 148%. This is as of December 2024. Now, the 493 companies, their return indexed from December 2022 up until now, that is December 24, because I'm not considering the rest, right? 35%. Overall S&P 500 return from December 22 was 57%, right? So do you actually see that there's a very, very big bubble forming? That only the 7 companies are sort of driving that particular return. Do you agree with that? And just a broader question, why do you think that it has been driven that way? Yeah, you're accepting that there's a bubble forming, but you're still telling there's opportunity. There's some comments that came about tech bubble, AI bubble. Okay, I agree with you. Tech bubble, AI bubble. Yeah, lot of positivity, optimism that is coming onto AI. Hence that level of push on returns. Okay, but there are undervalued companies like Alphabet that might cause the buying index to go up. Okay, when you say undervalued, what do you mean by undervalued, right? And what is Alphabet's current valuation for you to for you to come to that level of conclusion, right? Okay, growth potential, industry demand. Okay, semiconductor. All right. Yeah, it isn't a bubble, but mega caps are driving the tech disruption, and there is a lot of noise and cheap money is flowing. Disruption has been caused by China, not by the US. 18 times forward is undervalued according to me. All right. Okay. But shouldn't that push the returns lower? Right. Disruption has happened from China's side, not from US side, because DeepSeek, after the announcement of DeepSeek, the amount of money that went into developing LLMs and GPTs, the cost just went down. So disruption has happened from that side, not from the US side. All right. So overall, it does show that somewhere or the other that we are in a bubble. Do bubbles end well? Let's look at that data. Right. Okay. This is slightly dated, but it does show that the current bubble that we are in is definitely bigger than the 1990s tech bubble. Right. So if you see 2000, if you see 1990, the top 10 valuation versus today's top 10 valuation. Right. It's definitely higher. There's a question on what would happen for these companies if the Fed rate goes up. We'll get to that. It's a very interesting question. Right. But overall, it does seem like a bubble type scenario. And this bubble, to validate, this bubble is bigger than what we've seen in history. All right. So now knowing the facts as of today, would you still say that I will invest in NASDAQ? Okay, the comment saying stock specific only in this value only. All right. Okay. So your answer is still a yes. All right. There's one more yes. So are we going to see a yes further? Okay, what is the narrative about dollar cost averaging from this perspective? All right, we'll look at that also. I think I have a couple of more few slides. That's it, and then we can get to Q&A because definitely the Q&A part is going to be more interesting than the presentation. I think NASDAQ has fallen 20 odd percent from the start of the year. So uh, are we? Somebody said it's not a bottom yet. We'll wait for further dips. Okay. Only NASDAQ index has growth potential, but selected stocks in that. All right. During 2021, 2022, NASDAQ was undervalued and hence it has ran up more than 100% in a year. Yes, you're right. In 2020 itself, they were very cheap. See, but understand that scenario, the scenario that we were in, when you say 2021 to 2022, you cannot see only returns, right? Returns always give you just a one-dimensional sort of view. What was happening during that time? 2020, the whole idea that will growth come back? Are we going to come out of COVID? The whole idea was that the world is going to end. So why should we even give any valuation, something like that, right? Vaccine news would come, stocks would go up, right? So when you say past return, always go back to past and only then check what has been happening there, why it happened in a particular manner, live that era, live that period, right? And only then come to that conclusion or come to that judgment to say that, okay, can I compare it today? That's why the comparisons that we've been having now, they've only been based on very similar scenarios that have happened in the past. Like, for example, if you look at tariffs itself, which we will cover next, right? Do you think that this tariff is very bad? Okay, there's a comment that says, yes, in the short term, depends on whether you believe in open market theory. Open market theory is something else there. Okay, opportunity in disguise. No, you're only thinking from a stock market perspective. Yeah. Is it good for us and the economy in the long term? Okay, it is good for us. Sorry. Mainly due to inflation factor, potential recession. Okay, it's bad for global, good for US in the long term. All right. Okay. Fun fact. All right. This US tariff rate hike to 29% is the highest it has had in 100 years. Right. We did not see this at all for the last 100 years. And what we are seeing now is the highest. Now, do you still feel that it's good or bad? 100 years back, the scenario was different. But today, the scenarios are different. So, can we have that level of extremity today? Good for growth. Okay, it will cause severe inflation in the US. Yes, I agree. It's the ideology of Trump to make other countries reduce their import duty, which they impose against US in. I don't understand. Yeah, it's just to work fairer with them. Understood. Okay, tariffs are a means to force a recession, thus normalize interest rates, and yes, there will be some pain in the short term. All right. Recently read the Franklin Templeton report that the impact they are expecting in inflation is about 1 to 1.5% in the US, and even setting a supply chain in the US will take 3 to 5 years. You're absolutely right. Yes. Yes. My next couple of points were going to be on that point only. But yes, you have covered it and summed it all in a very crisp 4 5 line. And yes, the impact is going to be higher, and that to shift supply chains, it is going to take a lot of time. Right. Tariffs are bad for all parties. Very few will take advantage. Yes. So what I would say is 18 to 21, or rather 18, 19, 20, just the 3 years before COVID. That is the time for you all to actually go out and study. Right? As to what was happening in Trump 1.0, because Trump 1.0 and Trump 2.0 are not very different. They're very, very similar. Right? So yes, tariffs are bad for all parties going forward. This strength that is coming up uh, is only short-term lived, but over a long period of time, you always expect that the government will interfere. The government will come and tell no. That level of protectionism will always be there, saying I'll only put the money if the government is going to be there, right? But that from a long-term perspective hampers competitive advantages, hampers your ability to survive. Right? So yes, tariffs are somewhat negative for all parties involved. Right now, speaking of tariffs, so China has the most tariffs, right? Any country that you like in this to say, hey, this looks very interesting. This can have a positive impact on India. Any country that you like here to say, yeah, this can have a good positive impact. Please don't record my meetings. Uh, I like to use Otter AI a lot as well, but please do not. It's already going to come out on YouTube, so I don't think that you should spend more time to record this session. Okay, don't see Singapore. Yeah, in his big placard itself, there was no Singapore. Okay, there's one interesting one that says Vietnam. Okay. Okay, the math used for tariffs was also rudimentary. They introduced epsilon fee, which was 0.25, which values one, then multiplies with imports. Also, it is in tariff rates, but the trade service, which would not work out if I'm not wrong. I think there's one more line that you missed out on that says currency manipulation. So it's assumed that whoever is manipulating a currency will also be tariffed. Okay. Realignment of power axis expected can lead to more active bilateral trade agreements between nations. All of these comments right now are so speculative in nature. How can you even take a decision to say that, yeah, today's valuation for NASDAQ is very, very interesting. I will go put my money there. It's so speculative. Every comment that has been coming in this room itself has been very speculative in nature. Right? Bangladesh maybe might move Indian exports and textiles. Sure. But on the flip, whenever you read an article that says India is going to benefit out of just this one thing that happens, in reality, uh, there are many things that unfold, right? Say dump, because there is a lot of capacity in one part of the world, and other countries don't have protection measures in place. There is a dumping that takes place. So net, it's a very tricky scenario for both the countries to be in, because one, if you don't have that level of protection measures, you are at risk of getting dumped by other countries. The supply coming into you and the prices start going down, right? And then capital does not make more money, right? So uh, when because we've all been hearing, right, that textile is going to benefit out of this in India, pharma is going to benefit out of this in India, but we will just have to wait and see how things are progressing and what corporates are telling. Right? At on day one today, there is definitely no opportunity or no sign to say that we will jump on this. Right. So from a tariff standpoint alone, right? Uh, China has the most, but how much of it is actually imported for China from the US? The majority of imports coming in into China are from Germany, right? So definitely it's not as bad as what it seems for particularly for China and other countries. Also, you are already seeing some amount of talking happening for India in terms of trade agreements and somewhere where the rates would come down. But we have to wait and watch. We have to wait and see. This is definitely not a place where we have to jump into to say that yes, it's time to invest in NASDAQ. No, Definitely not. It's a time to wait for you. Yes, have fun. Look at it. It's down 20%. It's come to a fair valuation right now. But right now is not the time for you to go up and say that, yes, I will go and invest. One. Second, NASDAQ ETFs in India are trading at a premium. Why is it that NASDAQ ETFs are trading at a premium in India? Okay, there's no clarity within the US team as well. Trump has said he wants to use the tariff as a negotiation, while the press said US isn't open for negotiation. Yeah, there's a lot of there is a need for a lot more clarity, hence the decision to wait. Too much money poured into that for the sake of diversification and the ease of good investment. No, not much options for ETF. No, currency exchange. No. Is it trading at a premium because of AI boom? No, no, it's trading at a premium because the all the funds are shut. US, we cannot, Indian investors cannot invest globally because we've met that cap, so it is shut, right? So no more units can get created. So what is happening is you and me are selling to each other at a premium. If I have the units and there is no liquidity on the exchange, you will obviously, the price just starts going up, right? So hence that level of premium coming in. So all the more reason for Indian investors to step back to say, no, yeah, it's very interesting right now. We'll have to wait and see in terms of whether the RBI is going to lift its liquidity measure to say that a lot more people can come. Mutual funds can now invest globally. When that cap is increased or that cap gets removed, depends again on the RBI, depends on our forex reserve. But that's why hence it is trading at a premium. So one, lack of clarity. Second, uh, still the ETFs are trading at a premium, right? So if we have to see how much would be that premium for one of the largest ETFs here, which is more NASDAQ oriented, is about 8.7% at premium. China ETFs are much higher. China ETFs are somewhere between 16 and 17%. So in the last webinar, we already covered how this premium is a very big negative factor for Indian investors to do. Hence, both the options are completely out. Right. So two big reasons. One, it is trading at a premium, and second, there's a lack of clarity. Now, third, I think last couple of slides, then we can get to Q&A. So earnings revision. Now, this is latest data. Earnings have gotten revised, right? And they've gotten revised downwards, right? This is the most that we have seen almost, we have not seen this level of revision taking place since 2020, right? So there is a lot of negativity that is there. We saw it in the middle and we've come back to that particular scenario, but this was not a period where tariffs were involved. This was a period where things were going on very, very well. Slight amount of slowdown, slight uh, global slowdowns that was, COVID in nature, shutdowns, and all of that, right? And then supply chain issues started to come in. But right now, we are not in that scenario at all. Right now, there's no scenario that's working against us in terms of supply chain, in terms of COVID, nothing is there. Yet, uh, there is a downward revision in terms of earnings, right? So today, the multiple that you're seeing, I think there was one multiple just for a company, but if you see just from a NASDAQ perspective, what do you think that multiple would be? Nothing, no reply. All right. So at today's valuation, yes, Nasdaq does look attractive. It is at a fair valuation. It is coming to a cheaper valuation. But given the lack of clarity, given the negativity that is surrounding earnings, that multiple definitely looks interesting, but not interesting enough to go and start putting in money right away. But very, very interesting to say that the opportunity is definitely there. Right. But given the scenario right now in India, the premium that it's trading at, the lack of clarity that's there, let things evolve. But this level of overreaction that has come in terms of stocks is definitely, and somebody said stock specific, right? So definitely these are options to capitalize on. But from a broader sense, still things need some amount of time. But stock specific, yeah, definitely. This is definitely a place where you can get very large global brands, global businesses at very, very cheap valuation, very cheap valuation. Okay. Now, how is this correction as bad? Right? Should you actually worry? Yes, you should actually worry. This was last seen in 2020, this 2022. This was when recession fears are happening, slowdowns are happening. We covered that, right? Where we had another revision in terms of earnings, right? But that scenario was different, and this scenario was completely different, right? So this is one of the bad periods that NASDAQ has seen, that S&P itself has seen. So yes, it is a cause for you to worry. This was a couple of days back, couple of weeks back. But this week, your entire number is completely different. Your NASDAQ currently stands at minus 20% for the entire year. And your international stocks have actually gone and beaten your NASDAQ. Second, your gold also has gone and beaten equity. So gold has beaten equity last year. Gold has beaten all equities last year. Gold continues to beat equities even this year. Right? So, and gold is at an all-time high. So another asset class where people are scared, people are running towards safety, is not the dollar, is gold, but you are seeing some amount of volatility on the gold side. Hence the move to debt. Now, last slide. All right. Now we have seen this over the last 25 years, where US has had the best performance in history. Right? We've had small periods in which the other parts of the world, which is Europe, did well. Right? Asia has not done well up until after 2010. Asia has not done anything, which is more overweight on the China part. Right? Likewise, your emerging equity would at least have India starting to come in. Asia would have some amount of India coming in, but your Asia pact is majorly Japan and China. Right? And they have been underperformers since 2000. You've not seen this level itself, right? But for the last 25 years, you're seeing US going and outperforming everything else very, very handsomely, right? So this is, do you think that this level of outperformance can remain going forward? There was a very nice comment that says that last 10-year returns have been very good. I'm not very confident that the next 10 years we would see that level of return coming in. Right? Okay, to invest from India in US markets, people are saying that we need to at least buy for 1 lakh worth of stocks. Less amount investing doesn't make sense. Can you please clarify also, is in money a good platform? I'll take that at the end of it. Will investment in NASDAQ through gift city in USD make a difference by analyze? I'll also get to that again. NASDAQ fund of funds in India not allowing further investment, then how can you invest in NASDAQ? Yeah, you cannot, but you need to be mentally prepared for if the time comes, what do you need to do? Suddenly it will open like this, and in 1-2 days, the whole cap will be met because everybody is waiting on the sideline. You need to be mentally prepared. This basically the webinar is for you to be mentally prepared. Right. What's the special stuff for Singapore NRIs here? See, the Singapore NRI stuff is going to be the product Neo, and I'll get to Neo as well. Neo, for how is it that Neo can take advantage, one, of India's growth story, and second, for and because India today offers that level of growth for investors across the world. The way we are currently going, the way our macro scenario is, the estimates are that we will somewhere be between 6.5% sort of GDP growth rate. And the big change that came in this year was that the government is focusing more on consumption in India. Right. So NEO does take advantage of US markets as well as India markets. Right. So it is a multi-asset product where when you're looking to park money in India, this is a product that can actually, it's much more superior to that of a mutual fund and that of a NREFD. Right. So in terms of returns, definitely superior. Right. But we'll get to NEO as well, couple of slides later. Right. But in terms of NASDAQ, what is NEO trying to do from the NASDAQ part? We are definitely evaluating. We are waiting on the sidelines to see if there's an opportunity that opens up for us to go ahead and capitalize. But these are reasons why we are also not able to capitalize. Right. Now we'll get to NEO. Just a couple of slides on NEO. See, NEO does not have any cap on any asset class. So which means that we can go 0 to 100 on NASDAQ. We can go 0 to 100 in India. We can go 0 to 100 on debt. We can go 0 to 100 in precious metals, right? And we follow a more top-down approach, and we have a bottom-up bias on certain asset classes, right? We'll see that framework as to how we do top-down and bottom-up, and it is concentrated across themes with a market leadership bias. So let's say when we talk about a theme, when we talk about financialization or digitization of India, we will look at only ideas that fit into that. Say banks, say insurance, say exchanges, all of that would only come into that particular theme. But we go in with the idea that we would only like to stick to market leaders. Right? So this is the framework that NEO is operating in. And right now, does NASDAQ fit into this particular framework? Yes, it does fit into their particular framework. Because we've had a good amount of global investments that we have done since inception. The last global investment that we did was on Chinese technology companies. And I'm at liberty to speak about it because we do not have any position right now. But it was a very handsome performer for us over the last 2 years. Right. So we can take such growth-oriented, such contrarian positions for you in India, where whether you're in Singapore, whether you're in Dubai, if you're looking for a money manager in India to manage your wealth, then definitely this product can suit you. Right? How are we looking at top down and bottom up? So we look at a thematic idea. Like I said, let's just take financialization as a thematic idea. Are there top down approaches? Are there top down opportunities? Are there bottom up opportunities? Yes, we split into two. Then we look at whether we need to choose a more active strategy or a passive strategy. So for example, there is an example where we decided that, public banks are looking very cheap for us. So we took a passive strategy where we were able to do a sectoral/thematic ETF. You will not have us do a broad-based ETF, which is more Nifty 50, Nifty 500 sort of driven, but we would take sectoral and thematic. That's why the last point was concentrated thematic approach, right? That's the idea that we're looking to do. Right. Then when we look at active strategy, we then take that call to say, yes, we can look at direct precious metals. We can look at direct equity, which is we take some ownership in that particular business itself. Right. So that is top down. Bottom up is clear active, where we have direct exposure towards equity. Now, for example, where does NASDAQ come? NASDAQ comes from a more top down opportunity part, where it's more passive in nature. Still now, we do not have that option where we can go buy a direct company yet, but we are already in the works. We are already evaluating models in which we can invest in global direct businesses via NEO. Right. So right now, let's just stick to passive, and in that passive comes your global ETF. So that level of option is there, and we don't have a cap. That's the beauty of this whole product. We don't have a cap. We can go 0 to 100 in anything. But naturally, we don't want to take that level of risk. The maximum that probably we have gone to in history is about 12.5% for a particular idea that is more passive in nature, where we take a basket approach. Right. What we have done with this model is that the top down, then the passive, and then we chose the sectoral ETF. And usually it takes us 1.5 years for us to buy into a particular business, buy into a particular idea, whether it is top or whether it is bottom. Right? We go through that scenario of staggering in and then staggering out. Right? Is Neo only for NRIs? Yes, Neo is for NRIs. This is only an NRI product. That's why we have an NRI specific webinar. Today, it is more Singapore oriented. Probably last week or so, it was on UAE. And the reason why we segregate is because we want to interact with you first for a particular region, try to understand what and how your needs are sort of developing, and then curate a particular product for you. Right? Is there a similar one to that of resident Indians? Yes, the Sphere product is the Indian resident model, where that strategy takes advantage of mutual funds as well. Here, we will not be able to do mutual funds, right? But because there's a lot of paperwork involved, you have to come back, go through too much of hurdles. So we kept the model very simple, right? So Sphere is the equivalent for Indian residents, right? But it's the same model, right? It's the same framework, same thinking, right? So our objective is to build versatile portfolios that process in all markets. Now, since we don't have a cap on any asset class, we can have a debt where there's no pressure for us to go and put money on the equity part. Right now, our equity allocations are sort of going up, but last couple of months we were known. Incremental investments in equity were very, very low. We were majorly doing in precious metals and we were looking at debt as an option, right? But the whole point is in a high inflation, high interest rate scenario, your fixed income outperforms. We understand this. In a high growth where the earnings re-rate, then your equity performs. But where growth is low, where growth is slowing down, where you have to employ a dynamic strategy, where you have to have all asset classes, your multi-asset actually goes and outperforms. Hence, we have chosen this level of multi-asset approach. But the difference between us and another mutual fund is that we don't have a cap. They have a cap. Amphi says you need to have net equity of this much percentage, but we don't have a cap. Sometimes it does not warrant to have that much level of equity in a bad market. Right? So we have that level of option. Right? This is slightly dated. Give me some time. Probably at the end of the presentation, I'll be able to share you the updated numbers for February and March. But I think Feb is the latest number that we have. So probably at the end, I'll just put a screenshot over it. But overall, if you see, we in history we've been able to outperform even the flexi cap funds that are there as a category, right? By following this level of multi-asset approach. Right? So look at since inception, we've done pretty well compared to that entire category itself. Whereas your category itself has done very well, we've done better than that of the category. Right? Our drawdowns are definitely lower. We have not seen a very high drawdown since our inception. So this data still stands today also. I think at best Sphere has seen a -7 on that one day, but still it remains the same, right? More or less the number remains the same. So drawdowns are definitely captured. Our whole idea is to provide that level of stability to you when we are managing your money, where you see a good amount of growth coming in, but the drawdowns are much lower. So a stable journey going forward. That is what Neo is meant for. Again, this I can share as a screenshot. So where do we operate? This is a product and this is a strategy that is meant for investors who have a moderate risk appetite, moderate to conservative risk appetite, somewhere in the middle. But you don't want to see too much of drawdowns. It is a stable strategy where we can take advantage of any market, not only India. All our other products here are biased towards India, where we have 100% going into, or 90% rather, 90-95% going into Indian equities. But this is not a product that has an equity bias by itself. This is a product that has a bias for going towards contrarian approach, having a contrarian approach, going towards undervalued parts of the market with the market leadership bias, where we only look to invest in large companies. So by virtue of that, our large cap exposure is much higher. Right? Our small cap exposure will barely be 13% or so. Right? Despite that, we have done phenomenally well in terms of the market. Last 3 years for India has been majorly driven by small cap, mid cap returns. But for us, our entire approach of having precious metals in the basket, having global as a basket, and having undervalued large cap businesses has fared out very well for us. So if you're someone whose risk appetite is somewhere between moderate to conservative, this is the product, this is the strategy for you. Right? If you're an NRI, NEO is that strategy. If you're an Indian resident, then Sphere is that particular strategy. It operates the same model. Just that mutual funds will not come here. That's it. So it's a operational hassle. Right? So the expectation that you need to have is inflation plus 5 to 7%. That's the moderate expectation that you need to have from us. This is not a product that starts playing like a T20. This is a test plus sort of ODI sort of thing. We slog in last overs, but we are able to still deliver. Okay. Minimum investment is 50 lakhs. We have a fixed fee model of 1.5%. There's no profit sharing in this. It's just 1.5% on the net asset value, right? That is all about I have for NEO and I have for NASDAQ. So I think now we can open the floor for Q&A. Okay, let me quickly go back to the start and see if I'm missing something. Okay, what would happen for the companies the Fed rate goes up? See, we saw this scenario where the Fed started to hike up interest rates, and for the time being, you had a lot of issues that came in on the stock prices. But this is not a scenario where Fed would raise interest rates. This is a scenario where the Fed has to cut interest rates. And the markets today are predicting at least a 1% sort of they're pricing in that, right? Doesn't mean that it will happen. They're pricing in that level of correction, that level of cut, right? Okay, what is the narrative for dollar cost averaging? Look, if you're in a bad product, if you're in a bad category, then it's like for catching a falling knife. Dollar averaging works only when you're in a high quality, stable product where you can take advantage of. If you're in a product that is low quality, substandard, where the volatility is very high, then you're just catching a falling knife. Then you're not actually doing cost averaging, right? Okay. To invest in India, I mean, to invest from India in the US, people are saying that you need at least 1 lakh to stock. See, listen, when you do not have too much knowledge of a particular country sitting from India, then don't do stocks. You need to be full time into that thing, knowing, understanding the risk that you're taking for another country. In India itself, people are not able to understand that risk. I don't think that we would be in a better position to understand the level of risks that are there in another country. Hence, take a basket approach, take a more diversified and a basket approach. Look at a fund, look at an ETF. Never try to say I will pinpoint to do stocks. That 1 lakh for you buying into ETF or buying into funds will be much more beneficial than buying probably one stock where you don't have much knowledge on. It's it's like gambling. It's very speculative. Very speculative. It's like not captaining a player on Dream Level. Where you feel that no, or you captain the wrong player, right? So that can prove to be a problem. Okay. Will investment in NASDAQ through Gift City in USD make a difference for NRIs? It's still early. We'll still have to evaluate to see, how that would take place. It's still very early for Gift City. Usually it is for Indians to invest outside and for outside people to invest in India. So still early. I don't think that I would be able to answer that question. Okay. Considering there are no similar companies like Max 7 with wider moat and difficult to value, don't you think it's going to outperform the other companies for a longer period? Look, disruption can take place from anywhere. China has been disrupting, but yet it's not been getting the valuation, right? What is actually there for the Max 7 is sentiment and valuation. Apart from that, disruption in terms of technology, China is far ahead in terms of tech, far ahead in terms of, right? So moats can get disrupted overnight. And AI is definitely not a moat because it got disrupted. It's not something that, and technology usually has a low moat unless and until, you're always innovating, you're always creating innovative products. Okay, can you help me understand how Parag Parikh will perform in the future with the restrictions to invest in the US market? Look, they are already in the US market. Uh, they are running at a risk when they are having the US part, and the US market has just collapsed right now. It's not yet come up in the NAV, but it's definitely a big problem. And there is this whole idea that we should just have one fund and leave it. That's not how you build wealth, right? So that is definitely a very it is a big risk when you ask, say, there are already positions that are there on the US part, and they are quite large positions. So you will see a lot of problem that comes up there. But um, in fact, global investments that mutual funds are doing, they have definitely reduced from a a flexi cap fund. I remember one flexi cap fund having a lot of Max 7, right? And then in 2022, and then when the prices crashed, the NAV also went down along with it. Right? But it was masked because India also was going down. So it definitely does have a big problem. Okay, in countries like Singapore, there is no capital gains or big restrictions to invest in the US. Is there a way you can guide investments for people staying in Singapore and Dubai? Yeah, we can. Just send us a hi on this number. We can. We are already working with people, in those countries, managing their wealth. So we can. There's no problem. Okay, but if someone says invest more than $60,000 in the US and pass away, he has to pay 40% as estate tax in order to refund the asset. That's a comment for you. Okay. Is the Chinese market cheap? Yes, the Chinese market looks optically cheap. Risk I've covered in the previous webinar as well for China. There is a lot of risk in terms of growth on the Chinese part. That is more so they're dealing from what they have to do with the world. So that is the risk that are running on China. But we have already done one webinar there. The fee structure is 1.5% per annum. Okay, does Neo require a brokerage account that can invest in India, US, and global markets? No, right now we can do from India, Indian brokerages. We will take the ETF route. We are not taking a direct stock approach. So we will be able to do it. There's no problem. We have already done it. There won't be a problem. Should we hold the investment in NASDAQ? I did. Look, just send us a hi. We can take it one-on-one. I would rather have a one-on-one conversation and understand your position first than tell it to you upfront. Is it okay to invest in NASDAQ? Right now, nothing. Shall we continue to invest in US boring stock? Yeah. See, your US boring was never a recommendation, right? The index has done very well even this month also. Since inception, it has been doing very well. But in terms of, it was never a recommendation to anybody. They say do this. It was us to say that, yeah, when we are conservative as investors, the approach that we follow is working. That's what we wanted to highlight, to say, yeah, we're doing this even on the neo part. But it was never a recommendation. Who's going to trust China, right? Who's going to trust China? Do you have any other any product for NASDAQ? Uh, Look, we do the mutual fund also, uh, where we take advantage of NASDAQ. Right now, the fund is shut, so we cannot invest in NASDAQ. Even Charlie Munger burnt his finger with Alibaba. I think you're wrong. Okay, there's a question of should we hold NASDAQ if we're already holding? Look, we'll have a one-on-one discussion for that. Many people are already holding NASDAQ. Just send us a hi. We'll review your portfolio and then we'll understand whether it is a hold or sell for you. Let's review the portfolio. All right, I've put the number as well. I don't think there are any more further questions done. Thank you all so much for joining in. We'll see you all next week again. Done. If any other queries you want me to address, please send a hi on this number. For all the ones who have a NASDAQ, please send us a hi telling that I have some NASDAQ. I want to review my portfolio and we'll get on a one-on-one conversation to understand whether it is a hold for you or not. Right? All right, done. Thank you all. Have a great weekend ahead. Thanks.